Welcome back to The Explainer. I am absolutely thrilled you're here with us. Today, we are unpacking a truly fascinating moment in the crypto markets. Right now, we're looking at a tense, high-stakes consolidation phase that's playing out across the entire digital asset landscape. If you've been watching the charts lately, you know exactly what I mean. The energy is palpable. It feels like the calm before a very, very significant storm. We've got heavyweights battling massive resistance walls, while other major assets are quietly coiling up in the background. My goal today is to map all of this out for you, visually and clearly, so you understand exactly what the data is telling us right now. So this question right here is the absolute core of our explainer today. The crypto market is literally holding its breath. What happens when it exhales? We're going to skip any long agendas today because, honestly, the stakes are just too high and we need to jump straight into the action. We are currently in a waiting mode. It's a holding pattern where billions of dollars are actively deciding their next direction. And let me tell you, when a market in this much suspense finally exhales, the movements are rarely subtle. To really grasp what's on the line here, just look at this number, $2.64 trillion. That is the total market cap currently hovering in the balance. This isn't just a few day traders moving capital around, This is institutional money, retail volume, and algorithmic trading all collectively pausing. The sheer scale of the capital sitting in this holding pattern validates just how critical the next major move will be. A breakout or a breakdown from here shifts the weight of a $2.64 trillion ecosystem. Section 1. The 79K Bitcoin Wall. A battle for control. Over the last few days, Bitcoin has been, anything but calm. The volatility is spiking, the pace of the trades is frantic, and the battle between the bulls trying to push higher and the bears defending this line is incredibly intense. This timeline illustrates exactly what that chaos looks like. We started on Monday with a strong surge. Bitcoin climbed all the way up to $79,500. And then, bam, it was fiercely rejected. Sellers stepped in aggressively. By midweek, as the Federal Reserve meeting wrapped up, that downward pressure continued, dragging the price under $76,000. But the whipsaw action wasn't over. By Friday and Saturday, global news catalysts sparked a rebound back up to the $78,000 level. Then came Sunday morning. Bitcoin made one more desperate push, briefly breaking $79,000, only to be immediately swatted back down. Up, down, up, down. This isn't just noise. It's a massive battle for control at an absolutely critical resistance zone. So what's actually driving this erratic behavior? It really comes down to a perfect storm of macro drivers and geopolitics. First, the Federal Reserve kept interest rates unchanged. Now, while that was expected, the market's sharp sensitivity to any macro signal right now caused instant volatility. On top of that, we saw global geopolitical shifts, specifically reports of an Iran-US peace proposal hitting the wires, which acted as a catalyst for Friday's rebound. However, that was countered by continued skepticism and debate from key political figures in the U.S. regarding digital asset regulation. And look, we're not taking sides here. What matters is recognizing that the market is hyper-reactive to these headlines. Every news drop acts as a sudden jolt to the system, causing these sharp rejections and sudden climbs. Yet, despite all of this turbulence and the repeated failure to break out, capital is still clinging to safety. Bitcoin's market dominance is currently sitting at a commanding 58.5%, leaving the remaining 41.5% to the altcoins. This tells us a really fascinating story. Even with Bitcoin getting rejected at 79K over and over again, capital is leaning heavily toward it. The broader market is essentially sidelined, just waiting for Bitcoin to pick a definitive direction before deploying capital elsewhere. Section 2. XRP's consolidation. A quiet buildup. Okay, let's dive into this contrast because it is absolutely vital for understanding the broader market mechanics right now. On one side, you have Bitcoin, high volatility rejections, emotional trading, and aggressive price swings. On the other side, you have Ripple's XRP, a low volatility buildup. It's almost completely silent compared to BTC. But as any experienced analyst will tell you, silence in the markets does not mean weakness. Often, it means preparation. Now let's look at this holding price right here, $1.40. XRP has successfully reclaimed support around $1.35, and from there, it's been quietly forming a really nice pattern of higher highs and higher lows. Traders love to see this because it shows buyers are stepping in consistently. And this isn't just a low-volume drift either. Trading volume is currently sitting right around $2.15 billion. That tells us there's solid, consistent activity anchoring the price right here, building a controlled foundation as it pushes closer to that $1.40 level. And this brings us to what we like to call the pressure cooker.
Consolidation isn't inactivity, it's building energy for the next major move. And the data beneath the surface of XRP right now absolutely proves this. While the price looks stable on the surface, liquidity is actually thinning out. In fact, data from Binance's 30-day liquidity index shows a drop to around 0.038. That is the lowest level we've seen since 2020. When liquidity dries up, it means fewer orders in the book, making the market way more sensitive to sudden inflows or outflows. Meanwhile, derivatives data shows options open interest is up 2.81% to $52.89 million, and total derivatives open interest is near a massive $2.59 billion. Traders are placing their bets. The lid is on tight, the heat is rising, and the energy is building.
Section 3. Breakout or Breakdown. XRP's next move. The massive divergence in analyst projections lays out the stark reality of what is at stake here. The next major hurdle sits right between 142 and 145. If XRP can push through that range with strong volume, traders are immediately eyeing the $150 psychological barrier. Now, a monthly close above 150 would be huge. It could confirm a massive long-term breakout, leading to upside targets around 182, with some projections even pointing toward 220. That kind of movement could potentially be fueled by the gaining momentum in U.S. digital asset regulation discussions. But if momentum turns bearish and the pressure cooker breaks downward, the downside risk targets the $1 level. Because of that thinning liquidity we just talked about, either direction could be an incredibly volatile ride. Section 4. Altcoin movers and shakers. Let's do a rapid-fire rundown of the broader altcoin landscape to see what else is happening. In the steady column, we have the heavyweights holding their ground, Ethereum staying strong above $2,300, BNB holding near $620, and Doge resting around 11 cents with very low volatility. But jump over to the surging column. We have isolated pockets of real strength. TRX is pushing up 3% to 34 cents, and Algo has caught the attention of short-term traders by posting double-digit gains. Conversely, over in the sliding column, assets like BCH and Hype are seeing noticeable declines. It just goes to show that beneath the surface of a $2.64 trillion holding pattern, isolated pockets of high volatility absolutely still exist for those who know where to look. Section 5. Waiting for the catalyst. The final trigger. So we have a market completely divided. You have the erratic, highly reactive battleground of Bitcoin at the top, heavily influenced by macro events and headlines. And then you have the quiet, calculated positioning in assets like XRP, where thinning liquidity and rising open interest suggest a massive move is brewing just out of sight. The entire $2.64 trillion ecosystem is wound up tight, waiting on a single trigger. Which leaves us with the ultimate question: which breaks first? Bitcoin violently smashing through its 79K wall, or XRP quietly exploding out of its $1.40 consolidation? Whichever makes the definitive move first will likely set the trend for the rest of the year. Keep your eyes on the charts, watch the volume, and pay attention to the liquidity. Thank you so much for joining me for this explainer. Until next time, stay focused and keep learning.